Welcome to episode 60 of the Special Situations Report, a podcast by Insight Arbitrage. I am Asif Surya.
And my name is Tamanna Surya.
And today we are thrilled to have not one, but two investors I admire as our guests on the podcast to discuss a legal special situation that turned out to be a great long-term investment opportunity for our guests. There is still a legal overhang on the situation, and it helps that one of our guests has a law degree from George Mason School of Law. After exchanging several emails and Twitter direct messages discussing ideas, I finally got a chance to meet Viral Kothari for dinner in New York last year, and I met Stephen Kiel in Omaha the year before that after the Berkshire Hathaway meeting.
Viral and Stephen, thank you so much for coming on. We really appreciate it and are looking forward to the conversation today. Stephen, we can maybe begin with you. Could you tell us a little bit about yourself and your fund, Arquitos Capital?
Yeah, no, thanks for having us on, and it's good to see you both again, and again, Asif. I started Arquitos Capital in 2012. We've run primarily special situation and small caps, micro caps, smaller companies, and the law degree that you mentioned, it while helpful, not there's a lot of kind of specific dynamics related to patent law that you don't necessarily learn as a generalist when I was a lawyer prior to starting the fund, but started the fund back then. So now we typically look for situations like the one we're going to talk today. If there's some sort of legal dynamic to it, that's helpful, but otherwise there could be some sort of restructuring, spin-offs, all the things that I think you and your readers are interested in. But the way that I think I describe it most often is basically something that's company specific. So it's not specific to overall industry or the market as a whole. We want to be uncorrelated as much as possible. And we're looking for specific items that are occurring with that one company. And I think this one fits the bill pretty well historically over the last few years. And I think there's still quite a bit of meat on the bone in the next few years as well.
Yeah, the one we're going to talk about today is a situation I've followed for years, but unfortunately from the sidelines, unlike both of you who actually participated in the situation. Viral, can you tell us a little bit about yourself and your journey?
Yeah, sure. I think I took a standard Wall Street journey, studied finance in undergrad, worked on Wall Street during the global financial crisis. Shit hit the fan. Went to get my MBA. Then got a job with PIMCO and was on their real return portfolio management team. And then a little spout with Morgan Stanley. And really, I started reading investor letters, much like the one Stephen writes. And I think that actually led me to, trade my PA, which I was doing forever. But I really changed in pre-COVID. And then after COVID, I moved back to New York City and I realized I could just invest on my own. And I think Stephen might have had a investor letter and I started reaching out to other PMs. I reached out to him and we actually grabbed a drink a couple years ago now, at least maybe 3 years. Yeah. When liquidity was really a really special situation. And so that's what I've been doing for 5 or 6 years now. And yeah, I mean, I guess that transitions us into how I met Stephen. And I think that's when you brought up Liquidia, like December 2023.
Probably. And there's a few of us that were involved in, but it was kind of interesting because the way I actually found it was Martin Shkreli had a Twitter post about Liquidia. He's not in it or interested, I don't think, as much today, but I want to say this was about 4 years ago, and he highlighted it in a Twitter post, and that's how I originally came across it. And then when I started talking about it a little bit, I realized there were others like Andrew Walker and who were also, and Chris DeMuth, who were also kind of involved in following as well. So it's been a little bit of a journey here. And back then, I want to say that my initial purchase price was $4, and it's at
Wow.
36 to 38. Now, I will say caveat this because we're recording it as we're recording it, and we'll get into this later in the discussion. There is a court case, and that decision is going to be market moving. So some of what we'll discuss here, we may sound very smart when this comes out, or we may sound a little bit like idiots if it goes in a way that we don't think it will. But I think Viral and I both think that, and are fairly confident. So I'm going to put it out there a little bit, but we're fairly confident that we're going to get the result that we're invested in, and then there should be quite a bit more value here compared to the current stock price.
We're on this because we think we're not stupid, but once this airs, we're going to look really dumb.
Well, it's
Possibly.
a process. You can't judge
Probably
the
not.
outcome. You judge the process. And so I think we're
Exactly.
comfortable with the process no matter the outcome. Others may disagree when they see the outcome, but no, I think we feel good about the thesis and what we think the court case will, the court decision will be. But there could be some things on the edge as well. But I think that just goes to show that you have a company that goes from $4 to 36 in a 4-year time period, and there's still a possibility that it could, go to 150, which a share, which could be a reasonable price, given some of the things we'll discuss today. And so, it's a nice lesson for investors, and it's a good, for myself as well, to look in the mirror occasionally and say, just because something is run up doesn't mean that the opportunity is over.
Absolutely, Stephen. And I think you mentioned in your letter how that's how you approach special situations, right? The situation is not done when maybe the legal case gets resolved. Maybe there's additional upside that a lot of special situations, people like me included, or Tamanna included, we end up missing out on because we focus on the special situation and not the long-term returns, if you will. We could probably do an entire episode just on Martin Shkreli, but let's go away from there and focus on Liquidia. I've been following the company since it was trading at $7 a share, when I think Lionel Hutz, who's anonymous on Twitter and has a Substack, had been talking about the company, and I saw a lot of the work he put out, which convinced me that it was an interesting opportunity, especially considering about a decade before this, I'd invested in United Therapeutics and done quite well. So it was interesting to see somebody else come along with a similar product and do well with it.
Sorry to interrupt, but yeah, the interesting thing is that it actually, Liquidia is their current CEO was the former co-CEO at United Therapeutics. So it is a logical extension from that.
Absolutely. So before we dive into that legal battle between United Therapeutics and Liquidia, which does happen to be that special situation we're discussing today, maybe we can take a couple steps back and cover some background about Liquidia as a business, and maybe talk about the underlying medical condition it's seeking to treat as well.
And this is kind of an interesting thing with biotechs because, look, we're generalists, okay? And a lot of biotech investors are very protective, of investing in that industry if for people who don't have kind of specific technical medical expertise. But I do think there are opportunities here, especially in the special situation side, for people who have, those of us with a generalist background, because in some cases, we have a bit more of a beginner's mind there, but you really have to make sure that you understand, what you're getting involved in. And it can be, sometimes you have to be humble regarding that. So in this case, there's a medical condition called PAH, and also relevant here is PH-ILD. And basically this is, it's a lung disease. And the PH-ILD aspect of it is kind of scarring of the lungs. There are, give or take, maybe 100,000 plus potential patients. Not all, very, very few, small percentage of those are treated. And United Therapeutics, the competitor company here, they introduced a number of years ago a nebulized version of the delivery of a drug called treprostinil. And treprostinil is a generic drug, and it's basically in powder form to, get into your deep lung, and that helps to alleviate some of the symptoms to the PAH and PH-ILD. United Therapeutics' origin story was that the founder at the time, Martin Rothblatt, he was the founder, CEO of Sirius. and did very well there. He describes his daughter as being diagnosed with the disease. And so he started, putting in research and some of his assets and resources towards research into the idea. Eventually that led to the creation of United Therapeutics. And he has run it now. 15 years, as if you might know better than me, actually, if you were invested in it back then. Over time, and we'll refer to Martin as Martine going forward because over time he transitioned, remained the CEO, and continues to lead United today. And then as time went by, Roger Jeffs, who's the current CEO of Liquidia, he was involved, with United Therapeutics. He eventually rose up the ranks to become the co-CEO, and then at some point left the company. We don't kind of need to speculate beyond that, but I believe that was about 7 or 8 years ago. But back to your original question, this is the drug.
But yeah, one thing is Roger Jeffs was co-CEO, but for only a year. I think in 2015, 16, and he left somewhat abruptly. But he had started there, I think, in the late 90s when UTHR was founded, right around there. And so he started as in research, or became the director of research and a CMO of sorts. I've seen on other sources. So he really knew what was going on with the drug. I just thought that was interesting, worth mentioning, that he left.
Yeah, and it's a key point that Jeffs has that entire history and he essentially helped to build United Therapeutics as well over time. So I think that's important. But going back to your original question, the PAH, PH-ILD, there's a number of different treatments for it. What we're focused on here with United Therapeutics and Liquidia is specifically the inhaled version of treprostinil. And then we'll get into this, but there's patents all around the delivery system and other manufacturing and other aspects of it. But essentially, there are a number of different ways to treat these two, quote unquote disorders. There is an pill form, there's injection, there's, kind of an infusion, a pump, and then there is this inhaled. And there's various degrees of side effects, and there's various stages of the disease where each of these treatment kind of approaches are applied. And here, it's interesting because, as we get into the market opportunity, the inhaled area is kind of sits in between of the progression of the disease. And there's opportunities here on the competitive side, not just to take market share or to compete in the inhaled. There's also opportunities to take market share and compete against the pill form and against the injection form and other delivery methods, and not just with treprostinil, but other treatment methods as well, which involves other companies beyond United Therapeutics.
Makes sense. It's interesting that you started off by mentioning how you were a generalist, or you guys are both generalist investors, and biotech tends to be a very special thing. Because something my father and I discuss a lot is Warren Buffett's circle of competence, and we also call ourselves not biotech investors, but more often than not, there seems to be a lot of special situations within biotechs that draw our attention. And I remember looking at the situation between Liquidia and United Therapeutics, and the first thing that came to mind to me was that this was Avadel Part 2. Again, something my father and I were talking about a couple days earlier, was there was a battle between Avadel and Jazz Pharmaceuticals, where Avadel had developed a superior drug to treat narcolepsy, which is excessive daytime sleepiness, and Jazz sued to block the drug from going into production. What eventually happened was that the FDA ruled that Avadel's drug was in fact superior. Avadel ended up getting acquired by Alkermes, and the Jazz Pharmaceutical lawsuits were either ruled against them, or it ended up being settled out of court, and then the Avadel sale took off like a rocket. So this is fascinating to see, and it's interesting to compare these two situations together, and perhaps something very, very similar will play out for Liquidia as well. So then we were talking about the different forms of the drug that exist for Liquidia, for United Therapeutics, whether it be that inhaled version, the pill version, the injection version. Could you talk a little bit about how those drugs compare against what United Therapeutics offers?
They're drugs, And the reason patients like Yutrepia is their print technology. So most of these nebulizers, or even if it's DPI, dry powder inhale, you I guess inhale the drug, but the particles are all different sizes. And what you intake kind of hits your lungs, makes you cough. And coughing is a big problem with Tyvaso, United Therapeutics drug. And with Liquidia and Yutrepia, they invented this technology and patented. It's called print technology, particle replicate, something PRINT. Yeah, it's particle replicator something. But they're all uniform sizes. So the titrations, which is a fancy word for, I guess, just testing, taking inhalations of a drug and seeing how much you cough, taking less, taking more. Is that about right, Stephen? Titrations?
Yeah, and I think that that's kind of the unique aspect, right, of Liquidia. So they have this patented technology, as you mentioned, and it's it can be delivered right to the deep lung, and so it not only reduces the side effects like the coughing that you mentioned, but just as importantly, it can be kind of titrated up, which means basically they can increase the dosage over time to a much higher degree than the competition. And the cough aspect is certainly a negative, and a lot of people will stop treatment because of that. But it also the cough shows that the particles are not reaching the deep lung where they need to be. And so, as Viral mentioned, this technology that Liquidia has, it solves both. Attempts to solve both of those problems, and clinical trials have shown that they're much more successful at doing that compared to the competition, with reduced side effects, which is cough primarily, and increased ability to increase that dosage. And so because of that, you get much better outcomes, right?
Got it. Yeah, so just to emphasize once more, the underlying compound, and I'm going to murder the pronunciation of this,
Propranolol.
treprostinil,
Yeah.
had patent protection in the 1980s and has lost patent protection several years ago. So the patents we're discussing that we will talk about in the legal case are more about the manufacturing process and the delivery of the drug through inhaled administration. That seems to be the center of this case, not necessarily the underlying compound.
Correct. Yes.
Yeah, exactly.
Exactly. So that main special situations case, as we mentioned earlier, here is that legal battle that United Therapeutics has waged against Liquidia. But before we get into that, I do think it's important to understand where these cases come from, and that seems to do a little bit with the manner in which Liquidia sought approval for their drugs. So in contrast to the standard new drug application that companies file with the FDA to get their drug approved, there's also something called an abbreviated new drug application used for generics, and then a 505(b)(2) pathway, which Avadel used to get their drug approved for narcolepsy, and it seems Liquidia also used that pathway in order to get their drugs, such as Yutrepia, approved. And so Liquidia has used both that ANDA and the 505(b)(2) pathway in different cases. Could either of you dive a little bit more into what these pathways entail and how they are different from a standard NDA? And then maybe more importantly, why that's caused issues for Liquidia, especially with United Therapeutics.
Yeah, and I mean, I'll just real briefly. The issue with Liquidia was that when so if we go back to about 4 or 5 years ago when it traded at that price, at that $4, basically United Therapeutics had a number of different patents. Again, related to the delivery system primarily, things like inhalers and dosage and effects and outcomes and things like that. And Liquidia basically had to battle those all along the way. So I can't speak necessarily to their legal, to Liquidia's legal strategy involving that, and why they decided to choose a particular what legal mechanism or not with the FDA. But before they even received FDA approval, they were basically in court for, I think there were 3 or 4 specific patent cases. relative to United, where United had accused them of violating or being on the verge of violating the patent. And so there was the case that caused the largest increase in the stock price, and this was even prior to commercialization in June 2025, was a 793 case, a 793 patent. And eventually, we could spend hours talking about kind of the legal history there, but to give a brief overview, eventually that patent was invalidated. And so once that was invalidated, that allowed the pathway forward for Liquidia to receive FDA approval and come to market. Now, when we expected that to happen in 2024, and the FDA took a unorthodox approach, let's say, to apply an additional 1 year delay to approval, and that was related to, if I remember correctly, it was related to the transition. Basically, it was the inhaled method that they allowed an additional year of patent protection. And I don't know if you want to get into more details there or not, but that's basically what brought us to, and we'll kind of get into this, I think, with the next question. That brought us to the FDA approval in late May 2025, and the eventual commercialization of Yutrepia in 2026. Now, there are a number of different kind of issues related to that, including the labeling and other approvals, and the way that Liquidia went about by getting PH-ILD on the label in their application as an amendment rather than a standalone, which I think has kind of led to some of the additional challenges by United now with the 327 patent.
So, Stephen, going back to the approval that Liquidia has, and this is for pulmonary arterial hypertension, but there's another different indication, right? The one that you mentioned, which is interstitial lung disease, where there's scarring of the lungs. And that's a larger patient population that's addressable with a drug that Liquidia has. So even if they were to lose, for example, that lawsuit that United is trying to block them with this interstitial lung disease, what kind of impact would that have on Liquidia's future revenues from that indication? So what would it look like for Liquidia just to continue with a pulmonary arterial hypertension, a PAH drug, and not have this other indication approved?
Yeah, so as we continue that timeline of approval and commercialization, which occurred the commercialization began in late June 2025, that treatment and labeling is for both PAH and the PH-ILD. The PAH market Tyvaso is historically, that's what they're treating. They have been less successful at treating the PH-ILD market through inhaled delivery systems. And so Yutrepia, though, through their clinical trials, have shown to be much more effective at treating those patients. And so that's one reason why, first of all, there's a higher potential, TAM basically in the PH-ILD market, but it also is severely underpenetrated relative to the PAH market. And so as Yutrepia has, over the last 9 months now, been in the market, they have at least, they reported earlier this month, approximately half of their patient set and revenue comes from PAH and half comes from PH-ILD. Now, the lawsuit that we'll discuss later is specific to PH-ILD only. So even if everything goes against them there, they'll still have the PAH treatment. And PH-ILD is a subset of PAH, so there is still, there's still ways to kind of treat those patients with Yutrepia, but there's a little bit of there's more speculative about whether insurance will cover that and Medicare and things like that.
Oh, a big thing about the label about PH-ILD. Did you mention how insurance, if you're not able to put PH-ILD on the label and doctors prescribe it off label, insurance won't cover it. And this is, under $100,000 cost drug. So that's very important. And that's,
in some cases, though, now in most cases, I think not in most cases, but historically, as it came out in the 327 trial, that doctors were doing this and were fighting to get insurance to cover it, and some insurance did end up covering the PH-ILD, even though it was under the PAH label. So that actually gives some hope that if the lawsuit goes against Liquidia, that they could still have access to some of those patients, because PH-ILD, you don't have, if you have PH-ILD, you also have PAH. PH-ILD is a sub. And so, the way that they separate and designate that, the FDA has required that from labeling purposes, but for the real world, it's still it's still possible, and doctors have historically done this with Tyvaso, with United's drug, that they historically did prescribe it under the PAH label, but when the patient had PH, their primary disease was PH-ILD. And as Viral mentioned, these are not cheap drugs. I mean, this is $300,000 a year. These are drugs.
Yeah, to Viral's point, I think the fact that if it is approved, then it'll be easier for doctors to get the approval from insurance. Otherwise, you have to look at these comorbid conditions. I've seen this in mental health, where if you have depression and you have a neurological condition and there's a treatment that's approved for depression, you can then get it for both, but it's much harder to do that. So once you have the full approval, then the doctors will be able to make this go faster. Because as you know, the health insurance companies, they're likely to fight this quite a bit, especially if the cost is that high.
Yeah, but you see, the kind of blue sky for everyone in the industry is PH-ILD. Because I think they estimated it 40 to 60,000 patients there, and a very small number are currently being treated because there's not currently a good treatment for them until Yutrepia has come along.
Interesting. I guess speaking of treatments for PH-ILD or even PAH or any of these diseases more broadly, are the legal cases the only threat to Liquidia? It seems like United Therapeutics is also developing a new soft mist inhaler drug that is different than its prior offerings. It looks like Insmed is developing a once daily powder drug that saw some really good phase 2 data, and the company has started on phase 3 trials as well. And then that too, Merck seems to be working on their own drug, which is a disease-modifying biologic to treat PAH. So how do all these competitors maybe line up against Liquidia's own drugs? And do they represent a significant threat, especially compared to these legal cases, or where does order of importance maybe lie?
Viral, do you want to criticize the MIST announcement?
Yeah, like that. The thing is, all of these drugs we speak of, none of them are out, and none of them, you could have a year or two go by where Liquidia gets conservatively $1 billion in sales this year, $1 billion next. Let's say Liquidia is worth $2 or $3 billion. So if you get those kinds of sales numbers, like which match United Therapeutics is 20 billion on a couple billion of sales. So, and Liquidia is worth a couple billion. So just the relative valuation difference is so huge. But going back to now what you said, are these going to be competitors? So my main point would be like, hey, Liquidia's got a couple of years of revenues and they're very profitable there. So Liquidia's got a base to invest in. If let's say the most recent that came out was news that Martine Rothblatt had on her conference call, where she just came out of nowhere and said that they have an ultramist inhaler that is going to revolutionize the business. And all the call, I understood everything on the call. I didn't have to talk to anyone in the business. The call was just made. It sounded like there was no data, like absolutely none, just made to let people know that there is a great drug coming out. And there might be, you can't say, but it sounded very promotional to me. And one of the funniest things was on that call. By the way, this is the kind of analysis I do. And I read analysis of people doing some good work, like Steven, for example. And then really what gets me going is picking up on things like this, like Martine Rothblatt it just sounded like it was just scripted. And at one point, she just says something like, "Hell yeah, we are pumped." And it's just so, it's really funny to hear things like that on conference calls. I've just seen them over the years as good indicators. So United Therapeutics, what they speak of, I believe Roger Jeffs was even there for the technology. Like, it does, it doesn't work. Uh, and they're somehow bringing it back and saying it'll work. There's no evidence. The FDA trials, they say, are going to start later this year. There's a whole process you have to go through. And taking that, Insmed had a good phase 2. That's or was it phase 1 or phase 2?
Also phase 2, but basically, I mean, to both of those points, I don't think anyone in the industry takes the United Therapeutics missed announcement seriously. It's just a pie in the sky type of thing, because it addresses the cough, but it doesn't address the actual effectiveness. And even Roger Jeffs, the CEO of Liquidia, dismissed it and said that was something they'd looked at years ago and just dismissed completely, because the effectiveness level and titration ability would be very low. But yeah, Insmed is another. So when you talk about promotional, and we have to think about, there are certain industries where there are more promotional players, and certainly biotech is one of them. So that's the United aspect, and you can talk about TPIP and Insmed as well, and the promotional aspects related to that, Viral.
When all these products you're speaking of them, it's not like Liquidia doesn't have anything. Liquidia has a drug, L606, that is just as, if not more promising than all of these other competitors, just as far along as well. So the threat right now is, let's say all of them work, but Liquidia is in the game as well. So it's not like these drugs are going to take away from Liquidia necessarily. It's all speculation. And yes, Stephen, I forget the Insmed. What were they doing for speculation?
Well,
Promotion.
Insmed, yeah, they released their, I think it was their phase 2 related to TPIP, and it's basically a once daily inhaled, whereas L606, Liquidia's next generation approach, is twice daily. And so there's some discussions as to why you would want that twice instead of once. And because there is basically how it stays in your body, and when you need to replenish that. Obviously, if you could get the same effect on once daily, that would be preferential. But Liquidia believes, and I think has shown through their clinical trials with L606, that you actually do need, in order for it to be most effective, you do need to inhale it twice. That's through like a next generation nebulizer. But Insmed came out with this, and there was, I would say, a lot of skepticism related to the way that they designed their clinical trial and the types of patients that they enrolled in it, and that they're not going to be able to do in their phase 3 trial. And so the results were positive, but the patient base that they used was a completely different patient base than what Liquidia used for L606. And I think the theme here that we're repeatedly seeing is that Liquidia takes, and Roger Jeffs, the CEO, takes a sober, mature clinical approach to everything that they're doing with the company. And their competitors, United, obviously, is extremely promotional, and Insmed, in this case, was extremely promotional as well. And so I think there's a credibility issue there, because you can kind of game some of these clinical trials until they get to the endpoint, right? And Insmed immediately raised money after their phase 2 trial. They did a large capital raise. And their stock went up because of it, and Liquidia and United was hurt in the near term and then later recovered. But I think there's a lot of reason for skepticism related to TPIP and the Insmed drug. And clinical trials have shown, at least from Liquidia's perspective, that the L606 is actually going to be a far superior product for patients when it actually comes online in the next 3 years.
And
Got
along
it.
those same lines, another interesting thing that United Therapeutics did was they changed what type of company they were. They made themselves a public benefit corporation. And they really just want to advertise that they're helping people. But at the same time, it didn't, what they said didn't match what they were doing. They were suing Liquidia over Eutrepia. And the fact that Eutrepia is out now, patients are speaking well of it. They still want to stop Eutrepia sales. And it's kind of just questionable for them, uh, in my eyes, in my opinion, to have such a name change and be in such legal trials while your competitor is succeeding at saving people's lives and making lives better for people. Just
Yeah, Viral, that reminds me a lot, again, going back to Avidel, right? So Avidel's narcolepsy drug was something you took once a night and you went to sleep and it helped you. In contrast, Jazz Pharmaceuticals, which was generating nearly $2 billion from their narcolepsy franchise, it was two different indications. You had to get up in the middle of the night to take a second dose and then try to go back to sleep. And so the FDA essentially proved in court saying, hey, Avidel's drug is superior, but you're suing them, you're blocking them from selling this drug that is superior. And the patient only has to take it once a night. So sometimes when $2 billion is on the line, I guess companies don't necessarily look at what's best for the patient. They are trying to protect that revenue. So we see the parallels between Avidel and Jazz, and the same thing with United Therapeutics and with Liquidia. But going back to that $1 or $2 billion comment that you made, right? So even if Merck's drug, which is a disease modifying drug and it works on the protein and is a very different approach than all of these other companies, even if that happens, you get maybe a year, 2, 3 years of sales that is going to help Liquidia. And this was something I was going to ask later on in the podcast, but I guess we could jump to it now. Liquidia has not provided any forecasts for next year, right? So they haven't provided any forecast because of everything else that's going on. But there are a couple of analyst estimates out there, and one analyst or a group of them, the consensus is they're going to earn somewhere like $2.50 or 30 cents next year, and over $4 the year after that. So if you think of it in that perspective, it looks like a very cheap stock, as long as the binary outcomes related to the other indication doesn't go in United's favor. So could you talk a little bit about how both of you think about this company and what it's worth, both in terms of if they win the lawsuit and they are able to proceed with the second indication, which is the larger patient population they can address, as well as if they don't get approval for that and they only are able to proceed with pulmonary arterial hypertension or PAH.
Well, I mean, Roger Jeffs, the CEO, did say he expected a run rate of at least $1 billion in revenue in Q4 this year, beginning in Q4 this year. So that puts them above 1 billion next year. So it wasn't a formal guidance, but that's their expectations. A few years ago, he said publicly, Jeffs, that he believes Eutrepia takes 90% of the inhaled market, right? And that right now was a $550 million revenue run rate in Q4 2025. So that's call that $2.2 billion a year. And he thought a few years ago Eutrepia should take 90% of that. Okay, so call it $2 billion revenue. And that was before they realized when they came to market that they're not just taking they're not just taking market share from United, but they're also taking it from J&J with Uptravi, and they're also taking it, or they're also in partnership with Merck's Winrevair, the sotatercept. That when you put those two treatments together, the outcomes have been much more positive, exponentially positive for the patients. And so that market that we're talking about, that's currently at $2.2 billion in revenue annually, it's likely to be even higher. And because we haven't tapped into that PH-ILD market, as we discussed earlier, there's a lot of green space there, right? So, but going back to your question, evaluation wise, if you have $1 billion run rate annual starting in Q4, you're going to judge that for next year, and the year after, let's call it 1.4 billion. This is assuming a full win in the lawsuit. Their margins are at least 60%, closer to 70. They don't have partners in the same way that United has a royalty with Mankind. So call it, let's be aggressive and say 70% but be conservative on the $1 billion revenue. That's 700 million. That's $8 a share, right? And so currently United, I think, trades at 16 times cash flow or something along those lines.
Yeah.
And so, we're talking, you know, in the above the hundreds, up to 150 or so. And you would think that, Eutrepia would deserve a higher multiple if they're capturing market share in that way. So, for me, that's where I came up with $150 number. And that might even prove to be, I don't want to be hyperbolic, obviously, but that could prove to be conservative when we look forward 3 or 4 years from now, as L606 comes to market as well, and as they're able to address the green space of the PH-ILD market that's not currently being treated. So I don't know, there's a number of different sell side reports out there. Most of them have target prices currently, I think in around 50 or so. I've seen a lot of increases recently, with the exception of one outlier. But, let's say they're in the $40 to $50 range. Those are also after, knocking part of it down for the chances of a loss in the court. So once we get the resolution in the court one way or the other, and we get a little bit more certainty, if they get a full win, those $50 price targets are going to turn into $70, $80 price targets.
Yeah, and I think it's worth mentioning that, Stephen mentioned PH-ILD accounts for 50% of revenue now. It was actually 25% the quarter before. And going forward, the trial is for PH-ILD. So let's say they lose the trial, revenue's cut in half. Even if you cut, as Stephen mentioned, next year's conservative earnings per share, $8 per share. Let's just cut that in half, $4 per share. This is a $36 stock. It's trading 9 times next year earnings with giant growth rates. And people are asking, I guess the main question is, why is it trading here though? It's just, my opinion, the investor base is just so jaded from these legal trials that it's 3 years in the works. This could have been out, and United Therapeutics just keeps coming. And the investor base is really shy to pull the trigger. Whoever's in is in right now, and it's the marginal investor that you need. And once it clears this kind of legal trial, there's a lot of funds that won't even mess with this kind of company in a legal trial. So that really, that opens up the blue sky scenario. And never mind the fact that if we even spoke about the trial, Liquidia is pretty confident they're going to win. And if you look at the case in a lawyer's viewpoint, which Stephen can talk to better, everyone that does that gives Liquidia at least a 60% chance of winning. But let's just say it's better than 50%. Even if they lose, this stock is going to be a little higher. And when I say a little, I'm just being conservative. The valuation will kick in then. Just the trial needs to pass by at this point. Not that I'm saying there's not going to be a pullback if they lose. There's going to be a big pullback. But, that'll correct with time.
Yeah, because the reason is now you have certainty, right? And this kind of goes to our original discussion when we started here, that there are certain types of investors that are special situation investors like us. And then there are other investors who are, biotech specialists. You have your growth investors. You have people more interested in the income statement as opposed to, those of us who are kind of looking at these binary events and sometimes on the balance sheet side and things like that. And so once we get certainty from the court case, no matter what it is, the investor base starts to turn over. Okay. And I think where I've done very well in the past and the approach I like to take is to both buy it and own it during the special situation aspect of it and continue to own it once it exits that part, right? Because that turnover of investors allows for a completely different analysis to be done. Um, and historically I had a thing I used to do called balance sheet to income statement investing, where we would invest based on kind of net stuff, discount to book value, et cetera, strong balance sheet. But when there was maybe uncertainty related to the income statement side, and as that company makes a transition, the balance sheet investors exit, the income statement investors come in, and the income statement investors are applying higher multiples or multiples relative to cash flow and things like that. Whereas us balance sheet investors were looking at, what was it? It was a net or something like that. Or we took a Ben Graham approach, and it's the same situation here where we have most of the people involved here were involved because we had an opinion on the court case and an opinion on kind of the initial FDA approval and commercialization and everything like that. But once we get certainty from that court case, a whole different type of investor is going to get involved, and those investors are willing to pay higher multiples than we are. So it's worthwhile to continue to hold it through the entire cycle.
Interesting.
Absolutely.
That point on certainty actually leads me to another question, which might be a little bit more hyper-specific. There was something I was reading about when it came to Liquidia, and it's specifically tied to that generic injection that they work on with Sandoz, I believe. And there seems to be some sort of bottleneck with the specific type of infusion pump used to deliver the system, and that's produced by Smiths Medical. And there seems to be some sort of like limited availability and eventual discontinuation of that specific pump, which could constrain the long-term adoption and revenue potential of the generic version of that injection. I was just wondering, is that a significant concern at all, or does the majority of the revenue projections or anything fall mainly on Yutrepia and then also the potential of L606 down the road?
Yeah, I mean, everything is Yutrepia and L606, but I'll address that very briefly because historically, this is kind of another aspect of United Therapeutics being very aggressive, both legally and in the marketplace, where there was a lawsuit a number of years ago, and this doesn't apply to Liquidia at this point because they had they did not receive the settlement from this, but they were the ones who had been violated. And I don't know if it was the same with the Sandoz thing or not, but if I remember correctly, it was United Therapeutics had basically was found to have prevented the manufacturing of a pump or something along those lines. That they basically went in and caused a scarcity, not for the drug itself, but for the for the other elements to it. And there was a lawsuit. It lasted several years. United lost and had to pay a pretty sizable payout. It ended up not going to Liquidia, even though Liquidia was the ultimate, they were the ones who were harmed by it. But in this case now, today, that introduces, okay, is there a risk that United can do something along those lines today with an inhaler or other kind of manufacturing associated with it, not the drug itself, but the delivery system of it. And I think Yutrepia and Roger Jeffs, I think the thing with the infusion pump was before Jeffs had become CEO of Liquidia. And so he is, fully aware of the tactics, I'd say, the historical tactics that United has introduced. And I think he's in many ways helped to mitigate those because of his understanding of it. And for Liquidia, their inhaler, for example, is very different than United Therapeutics inhaler. So they're different manufacturers, and there's not the same ability to kind of act as a gangster in the marketplace in that way. Let's say, take these mafia-like tactics. And it might be worthwhile to quickly mention that then the reason why the inhalers are different. So Liquidia has a low effort inhaler because of their print technology with the way that the treprostinil drug is smaller and more uniform. You don't need a pulsed kind of higher effort inhaler because it naturally, as you breathe, will go to the deeper lung, and that's a huge advantage because a lot of these patients don't have the ability to take strong breaths because of their disease, and that's a secondary effect as to why Liquidia Yutrepia is shown to be more effective in the clinical trials. And it's also to say, okay, Tyvaso cannot catch up on that with their current manufacturing process. And the only way they can do that manufacturing process is to apply the manufacturing process that Liquidia has, which is patented. So, I mean, we have
Very interesting.
an advantage that is that cannot be caught up.
Absolutely. And that's what it seems to boil down to because the underlying molecule is the same for all of them. One of the things I wanted to talk about, you guys make a very good point about, how much this company is potentially going to be worth if they hit the kind of sales targets they have planned with or without the second indication. But I was looking at insider transactions, and Viral, I look at that very closely on a daily basis. Tamana and I look at it every night. Together, we read the Form 4 filings. And one thing I've been seeing is the chief medical officer, the chief commercial officer, and several other insiders of Liquidia have been selling recently. And as recently as this week, I noticed some sales as well. So I wonder how you guys are thinking of the insider sales, some of which are options related. They probably waited a long time. They had options that were vesting and they sold after the options. But some of them were not options related. They've sold, so they sold in the 30s, they sold in the 40s. And so I was curious about how you perceive a cluster of insiders across the board selling stock of Liquidia at this point.
Oh, one thing, actually, it's great that you brought that up. I just got an email from Inside Arbitrage that Martin Rothblatt has sold another 9,500 shares today. 9,500 shares of UTHR is like $5 million. And she's been doing this almost every day since, I think, for the last 2 weeks. She filed to sell up to, I think, her whole holding amount. She's able to. It doesn't mean she will. So those sales are huge. Liquidity, on the other hand, you don't want to see those sales, but from what I've seen, and I don't pay too much attention to them because honestly, the dollar value isn't that high. They're mostly RSU grants, and most of them are just RSUs that have vested and or options that are not that sizable. It's not a big ticket item. I think the ones I saw weren't even in the millions. There might be a couple, but yeah, Steven, I don't know if you paid more attention to them if you want to comment on. But the UTHR sales those are like sizable sales by Martine and some of her colleagues. And after saying something like, hell yeah, we are pumped, for her to just turn around and then file to be able to sell and then come through with it with, selling almost 10,000 shares a day.
Late Friday afternoon, too. Late Friday afternoon
Yes,
before, I
yeah,
believe it
yeah.
was
She
before
tried to hide that.
the holiday. I believe it was before the holiday as well. It's suspicious activity. Like as outside investors, right? You see things like that where there's a very promotional conference call, and then immediately afterwards there's a filing to sell. I don't know if it was all or a significant amount of her shares before on a Friday afternoon before a 3-day weekend. So obviously it's suspicious, and I think correct me if I'm wrong. Do you have the insider sales up?
We do. I
Yeah.
do.
So look at United Therapeutics real quick.
I do.
If I remember correctly, when the trial was post-trial motions and things since then, I believe their chief legal officer was selling as well. But correct me if I'm wrong.
So, as you guys mentioned, Martin was selling, a director was selling, the CFO was selling recently, and their general counsel also sold in mid-March. So that said, what I am noticing with Martin's sales, Viral and Stephen, is they are options related sales. So she's exercising options and selling them immediately. On the selling side, for the most part, if I see options related sales or even something under 10b5 one plan, I don't pay a whole lot of attention. The signal is mostly on the buying side. The buying of United Therapeutics by Martin Rothblatt 12 to 15 years ago is what made me invest in that company, and I made good money on that. It's what made me invest in Avidel. The Avidel insiders were buying at $7 a share. It eventually got acquired at 18.50, and then it got into a bidding war, and it was revised upwards. So I mostly pay attention to the buys, but on the sell side, if I see a cluster buy selling that are not related to options exercises, that's when I pay a little bit of attention. I just was curious to see if you guys had a differentiated opinion on that.
And Liquidia were buyers. I mean, Roger Jeffs put I believe 10 million of his own money when they did a capital raise a few years ago. And there were a number of others involved who are significant owners already, both at the director level and elsewhere. So I mean, I think from our perspective, to your point, Martin has not bought in a long, long time, sells immediately the options. Yes, typically I agree with you that option selling is, less concerned. But you're talking about the CEO who I believe it was a few years ago was considered the highest paid female CEO out of any public company, So she is getting massive, massive payouts, mostly options related, because that's the way they've structured the company. Whereas, on the Liquidia side, relative to those sales that you mentioned earlier, I'm not as concerned because one, you have tax consequences that many of them, need cash to pay for. And then secondarily, it's completely understandable that this risk is not zero that this court case goes against them. And so it's completely understandable for people who've kind of gotten, in some cases, the beginning of generational wealth from their from their occupation with Liquidia, that they would take some risk off the table there. But I don't think anybody sold their entire position or anywhere close to it on the Liquidia side. I think there are several on the United side that have approached that.
Yeah, absolutely.
I think that filing that Stephen mentioned was on a holiday. Martine, it was to sell up to $1 billion. And that doesn't mean she's going to do it, but it's just a staggering amount. And yeah, when people talk how she does on the calls, like you'd want to hold on to all this stock, whether it's options or whatnot. And the fact that she's not is just something that speaks. But again, I actually agree with you. You sell for many reasons, but you only buy for one. So there's the buying is what you should look for, and there's not any on United side.
Well, we should also say United's been a great investment. It also has done very, very, very well. So, it may or may not even be zero sum here because they do have a few clinical trials related to COPD, which is a massive market, and IPF as well. That if they can get patent protection related to that, they could continue to do very well. So, I personally would not short in any way United, and I do feel very strongly, as we mentioned, that Eutrepia takes virtually all the market over the next few years from the inhaled side. But United has some things up their sleeves, and I think it was Munger that said, you should never underestimate someone who overestimates themselves. I remember him saying that at a meeting at the Daily Journal that I was at when somebody asked him this was about Elon Musk 15 years ago. And so I think we can apply that to Martine here as well. And so I would not in any way kind of short the stock, and I'm sure they have some other things up their sleeves. But as it relates to Liquidia, I think once we get past this court case, that's kind of the end of the road with that competition.
Yeah, I mean, as far as management teams go, Liquidia's got a great one that seems like they just want to get this drug out and help people. And United Therapeutics has an amazing management team for the shareholders. They're doing a phenomenal job. Like they're writing the masterclass on it. They're doing a great job.
Absolutely. And I think there's one last question Tamanna has, but I want to make a quick comment on compensation. I'm not a big fan of, CEOs that pay themselves hundreds of millions of dollars or sometimes even over $1 billion. There has been one instance where it's a non-founder CEO that paid themselves over $1 billion. And David Zaslav of Warner Brothers Discovery is going to make over $800 million if this deal by Paramount closes. So that is a phenomenal amount of compensation if you're a non-founder. With United Therapeutics, I would say that Martin Rothblatt is the founder CEO, and so often they end up with a large chunk of the company, which over a period of time they exercise through options and sell. So when you look at compensation for a founder CEO, oftentimes it seems to be quite egregiously high, but that's simply because of the fact that they have founder shares in the company.
Yeah, definitely. Agreed.
Exactly.
But do they keep getting options along the way?
They do. They do.
Yeah, that's
Good point.
that. I mean, many of
They
them
do.
do. That's also the point. But when you think about a founder
Absolutely.
CEO that's like a Google or Meta or Microsoft or something like that, it's a different situation than even when you think about Elon Musk and the big options package and things like that. And I think United kind of falls a little bit more into that category than the ones that happen to own 40% of the company and then went public and just, it's not Buffett like, I think that's safe to say.
Absolutely.
That's a great consideration. We did have one last prepared question, and I think this is a pretty good transition to it because talking about insider purchases always reminds me of another company that we at Insider Arbitrage are really interested in within the healthcare space, and that's Ligand Pharmaceuticals, which is an owner of different royalty assets in the biotech space. I think what we were just curious about is when it comes to Liquidia, are there any big royalties that need to be paid out down the road? And what kind of impact will that have if revenue does increase over time?
I mean, one obvious one potential royalty is out of this case, actually. Um, a favorable ruling could be, you know, they can market for PH-ILD, the label goes on, it remains, and they owe UTHR 10% royalty. I don't know about the possible range of royalties, yeah, but it could be a 10% would be a huge win. Um, and I don't know what's possibly the highest that they could go, Stephen.
Well, I don't even know. With the court case, there's not necessarily a history of a court kind of designating, assuming very briefly, assuming that the judge finds that the patent is both valid and enforceable, and that Liquidia violated it. One of the options that's been discussed on Twitter, at least, I don't know how valid it seems on the legal front. I literally don't know. Is that there could be, some sort of royalty assigned to it because it would not be in the public interest to remove Eutrepia from the treatment for PH-ILD. It wouldn't be in the public interest for the patients. I think, as Viral said, there's been some numbers thrown out there, but I don't think that hasn't been thrown out by the actual lawyers in the case or the judge or anything like that. So this is really speculation on investors' part. And I think Viral, there might have been a couple of references, right? I saw on Twitter where people had referenced a previous situation that may have been a 10% or something along those lines.
Yeah, exactly.
But look, who knows? I think is a short answer there. And I don't know if this judge would even entertain that or not. And to do something in the public interest for a patent that's a debatable thing as well, because what is the public interest, right? So you could say, well, if this product was removed from the market, there would be a negative effect for those currently being treated with PH-ILD. But the whole point of patent law and protection is to provide that kind of longer term public interest, right? And so you can't, there's second and third order effects here. So I really have no idea how the judge would take that into consideration or not. But there is, I think, in terms of specific kind of agreements that they currently have outside of that court case, I think they do have a royalty agreement. This was kind of part of their funding previously, but this is not material. I think there's just kind of briefly looking at it now, or there's a tiered royalty structure with the healthcare royalty. Let's see, it was one agreement. Then they have one with Formosa as well, I believe, with the L606. But I don't think we need to necessarily um, at this stage until we start kind of getting the actual revenue numbers in that we can apply those tiers to. Um, given the situation we're at right now, I don't think we need to delve down to that level. I think
Got it.
it's a little bit different because United Therapeutics had a 10% royalty with Mankind because Mankind was a manufacturing partner, and that's not the case here with Liquidia. They don't have manufacturing partners in that way, but they did have funding partners.
Yeah, I remember Mankind well. The founder CEO used to buy all the time, and they were working on an inhaled insulin drug, if you will, which was very difficult for them to get through approval. I don't know if it's still approved. I stopped following it a few years ago. So, Stephen, we were talking about the healthcare royalty partners, $100 million financing that they had done with Liquidia, which gave them a certain amount of royalty on future revenue. I think it ranges from just a few basis points all the way up to 10% of revenue. So that's something we'll have to do a little bit more work on to understand how that royalty structure is set up. We are invested in Ligand because they have similar structures with other companies and they've done very well because of that. So, just by way of disclosure, I have a position in Ligand. I used to have a position in Avadel, still have the CVRs after the deal closed. I have no position in Liquidia at this point. How about you, Stephen and Beetle? Any disclosures?
Yeah, just Liquidia.
Yeah, myself as well, Liquidia, and we hope you will have a position too soon.
I'm very much interested. This conversation and the preparation for this podcast has gotten me very interested in this. I've been following from the sidelines, but I'm glad we got a chance to do this. It gives me some deep insight into the company.
Yeah, and I think just as kind of a way of closure from my end, I think once we do get that certainty after the lawsuit, again, we could have the result before you even release this publicly. So, or it could be any day now. It has been since last June, so we literally are expecting the decision any day. But that next stage is ultimately that puts them into M&A talk. Right. And there are some partners there, Merck, J&J, and others that I think would seriously look at Liquidia and may already be having some talks, just waiting for, some certainty to occur. There was a situation, I believe this was about 2 years ago, and I'll just kind of share this as a way to maybe find ideas like this in the future that might have some M&A associated with it. A lot of times these senior management, their contracts, their employment agreements are filed with the SEC. And if there's an agreement that's filed kind of off schedule and it includes a payout for a closed transaction for a sale of the company, not just for the CEO and CFO, but also for most of senior management. And sometimes some of those other agreements are also filed with the SEC. That's a great way to understand that there's been some discussions behind the scenes, especially if it's off schedule, if it's not on an annual basis. And that occurred with Liquidia a few years ago.
Absolutely. You're talking about the change of controls, option acceleration that happens in some of these situations. Yep,
Absolutely.
it's something we've looked at.
It'd be great to take a deeper look at in the future down the road to find similar situations as you mentioned. I think before we wrap up our conversation today, something we like to ask all our guests is if there's anything they'd like to speak more about that we haven't already gotten a chance to cover. I know, Stephen, you just mentioned M&A is a possible option down the road. But Viral, if you had anything else to add, that'd be great. And then also, where could our viewers or listeners find you both?
Yeah, so I don't really do much publicizing on Twitter, but I'm CFAs for CFPs. I mostly just I would only post about losing positions where I need a lot more people to buy. So be careful what I speak of. Not financial advice, obviously.
Yeah, you can find me at arquitos.com. It's ARQUITOS, Arquitos Capital. I'm on Twitter as well, but I think you could find everything through Arquitos, and feel free to send me an email. My information is there, and I'm happy to kind of discuss and chat with some of these ideas.
Sounds great.
Great. Thank you both for coming on. We're going to wrap things up here.
And that wraps up episode 60 of the Special Situations Report. It was absolutely wonderful having on both Stephen and Viral as our guests for this week. If you'd like to access a more comprehensive weekly overview of all Special Situations activity, go ahead and visit our website, thespecialsituationsreport.com, for daily updates and alerts on the event-driven world, as well as access to tools to help you identify opportunities such as the merger arbitrage tool. Check out insidearbitrage.com.
And if you enjoyed this podcast, please take a moment to like and subscribe on whatever platform you may be listening on.
We also wanted to provide a brief reminder that this podcast is for general informational and educational purposes only. The content does not constitute financial, investment, legal, or tax advice. We do not warrant the completeness or accuracy of the content or data provided in this podcast. We or our clients may hold a position any of the companies discussed on the podcast. Nothing discussed in this podcast should be interpreted as a recommendation to buy, sell, or hold any investment or security. Investing involves substantial risks, including the potential loss of principal. You should conduct your own research and due diligence before making any investment decisions. Thank you.